Next up is your employees. Okay, I like to call them your employees, or currency pairs. Now, like I said before, you need to treat trading like a business because it is a business. Now, if you look at it in business terms, um, when you start up your own business, you're not going to employ 100 people straight away, right? You're going to employ maybe one. I mean, two, three, four, somewhere there. Just like in trading, you know, in trading, your employees are your currency pairs because remember, they are the ones that's making you your money. So you cannot employ 100, yes, even though there's so many currency pairs to trade, it doesn't mean you should trade all of them. Okay, so you're not going to employ 100 currency pairs because you're going to lose. Remember, they all move differently, even though some of them include the same currencies. Doesn't mean they move the same. So, rather start off between 1 to 4 pairs, focus on those, master those 1 to 4 pairs. Once they start making you your money, your employees, then you can move on to adding more employees, more currency pairs, okay, if you want to. I mean, a person that focuses on 2 pairs, for example, can make more money than a person that focuses on 20, right? It's not about the amount of pairs you have, it's how you trade those pairs. So the only difference is lot sizes. So you can master 2 pairs and know exactly how they move. You just need to increase your lot size. Whereas if you're focusing on 20 pairs, it's hard to focus because they're going to move differently. But anyways, let's get into it. So in the currency market, you will always trade currency pairs. Okay, pairs, not just currencies on its own. Like I said, I like to call them your employees. You won't be able to trade a currency on its own, so just the American dollar. No, you cannot do that. You are trading the one currency's value for that of another currency. Okay, basically the exchange rate between those two currencies. Now, this is an example of a currency, okay, not a currency pair. I just want to explain how it is dissected. So USD, right? It's three characteristic sort of, like shown above. Now, the first two letters in a currency is the country where it's from, and then the last one is the currency. So USD, United States dollar. All right. For example, ZAR, right? Okay, in the olden days it used to be South Africa, so ZUID, hence the Z. So South Africa Rand. Okay, South African Rands. All right, so that's how it's broken down. So you get three types of currency pairs. Okay, you get the major, minor, and exotic. So I'm going to go through all three of them quickly. First one is your major currency pairs. Now, your major currency pairs, they all contain the United States dollar. So it's all the major currencies against the United States dollar. Now, yes, we've been through the 9 major currencies. However, there are 7 major currency pairs. So don't get the two confused. Okay? 9 major currencies, 7 major currency pairs. Right? We need to focus more on the pairs than currencies itself. So major currency pairs, they provide more opportunity. They are most frequently traded, and because they are most frequently traded by the majority of traders, the liquidity and volatility is higher, meaning your spreads are lower. So the brokers takes less money from you from the spread because there are more traders in the market. They make more money from the traders, right? Here are examples of the major currency pairs. Like I said, they all include the dollar. Okay, so you can, pause the video, screenshot this, you can print it out, as long as you remember these, okay? Like I said, don't trade all of them. Choose, like I said, there's major, minor, and exotic. Maybe have, 3 major pairs and 2 minor pairs, and then you focus on that, or 2 major, 2 minor. Don't necessarily focus on exotics. I will explain that when we get there, why you shouldn't mainly focus on exotics. But here's the pairs, the currency names, and Forex terms. Okay, I'm not going to read all of this. It's going to take too much time, like I said, you can pause it and then just go through it. So for example, let me just give you the first example. Euro USD, that's how it looks on the platform. Okay, it is the euro against the United States dollar. And if you want to speak of it in Forex terms, it's known as the euro dollar. So you're trading the euro dollar basically, instead of saying, oh no, I'm trading the euro against the United States dollar. Okay, or we just generally say we're trading euro USD. Okay, whichever one you prefer. So the major pairs is euro USD, GBP USD, USD JPY, USD CAD, AUD USD, NZD USD, and the USD Swiss franc, USD CHF. Right. Next up is minor. Okay, it's split into a few, but I'll explain that. These are all the major currencies that we've been through. Okay, obviously except the Chinese one, but it's all those other major currencies, excluding the United States dollar, because remember the United States dollar is part of the major pairs. So some people call it minor currency pairs, some people call it cross pairs. It's up to you what you want to call it. Even though they aren't major pairs, okay, and it isn't traded as frequent as the major pairs, okay, they are still liquid, meaning they provide plenty of trading opportunities as well, just as much as the major pairs. Okay, so don't worry about that too much. So here are the examples. Like I said, you can pause and screenshot. First one I want to go through is the pound miners. Okay. First example, GBP AUD, it is the Great British Pound against the Australian dollar. Okay, the Forex term for this is the Pound Aussie. Then you get the GBP NZD, GBP CAD, and the GBP CHF. Okay, these are the pound miners. Then you get the euro miners. Okay, Euro AUD, so the euro against the Australian dollar, known as the Euro Aussie. You get Euro NZD, Euro CAD, Euro Swiss franc, Euro GBP. Okay, then you get the Japanese yen miners. So it's every major currency except the dollar, okay, that includes the Japanese yen. So GBP JPY, the Great British Pound against the Japanese yen. Okay, it's known as the pound yen or guppy. Right, you get Euro JPY, AUD JPY, NZD JPY, CAD JPY, CHF JPY. And then other miners, it's everything else included. So AUD is NZD, Australian dollar against the New Zealand dollar. Okay, this is known as the Aussie Kiwi. You get AUD CAD, AUD CHF, NZD CAD, NZD CHF, CAD CHF. So those are all the minor currency pairs. Next up is the exotic pairs. Now, it includes one major currency, for example, the American dollar, against developing or emerging markets. So, for example, South Africa, Mexico, Brazil. Okay, we'll get into those. Exotic pairs may pose, great profits. So you can make a lot of money, okay, as well as, a big loss as well. But spreads are extremely high on these pairs, okay? This is why I say, we don't really trade these. Sometimes I'll trade USD ZAR, but not often. Because remember, the higher the spread, the more you're going to be paying your broker. Now, why is the spread bigger? So major pairs, spreads are smaller because a lot of traders are trading them. Now with the exotic pairs, there's not many people trading exotic pairs because, only a few, let's say American traders are going to be trading the rands, okay? Some don't even know what rands are. So there are less traders trading in the, exotic currency pairs, for example, USD ZAR. So because there are less traders trading it, okay, brokers have to push the spread up so that they can make money from the spread. Hence why the spread is like, let's say Euro USD can be 30 points for, the spread, whereas USD ZAR can sometimes go up to 1,000 points. That's huge. Okay, so that's why I mainly don't trade it. Examples, right? USD ZAR, United States dollar against the South African rand, known as the dollar rand. You get USD BRL, USD MXN, US RUB, USD CGD, USD HKD, USD SAR, USD PLN, USD CLP, USD CHB. So those are all the exotic currency pairs that you get. Right, those are the three major, sorry, you get major, minor, and exotic pairs.